Zyan checked his banking app for the 11th time that week. Payday was 6 days ago. His balance, $118. No sports car, no luxury vacation, no expensive addiction, just gone again. If you've ever stared at your phone wondering, where did my paycheck go? Stay with me, because by the end of this video, you'll know exactly what Zyan discovered, and it will completely change how you think about money. Zyan is 24. He has a full-time job, a steady paycheck, and a pretty normal life. Every other Friday, his salary lands in his account, and for about 6 minutes, he feels rich. He tells himself, this month is different. This month, I'm actually going to save. But by week 3, he's broke again. Every single time. Here's the uncomfortable truth. Most people don't stay poor because of one huge mistake. They stay poor because of small habits repeated every week that quietly drain their money. The good news is that every one of these habits can be reversed starting today. This is the story of the 7 money mistakes that kept Zyan broke and exactly how fixing them changed his financial future forever. Mistake number 4 is the one almost nobody talks about, so don't skip ahead. The first mistake was spending without a plan. Payday arrived, and Zyan's account looked healthy, so he felt confident. Coffee on the way to work, because it was only $5. Lunch with coworkers. Too tired to cook, so dinner was delivered. Discounted headphones he didn't need. A few random weekend purchases just because. None of it felt reckless, and that's exactly why it was dangerous. By the end of the month, the money was gone, and he honestly couldn't explain where it went. The truth was that his money hadn't disappeared. It had simply followed his habits, one invisible decision at a time. Without a plan, every purchase felt reasonable in the moment until those small decisions stacked into one big financial problem. So Zyan tried something almost too simple to believe. He spent just 10 minutes giving every dollar a specific job. Rent, groceries, savings, investments. Fun money, 10 minutes. That was all it took. For the first time, he stopped wondering where his money had gone because he was deciding where it would go before he spent it. The second mistake was lifestyle inflation. A few months later, Zyan got promoted. Bigger paycheck, bigger smile. He celebrated by buying a new phone, moving into a nicer apartment, signing up for a premium gym, and eating at more expensive restaurants. After all, he had earned it. 6 months later, he was making more money than ever before. Yet he was still living paycheck to paycheck. This has a name: hedonic adaptation. Every upgrade feels exciting at first, but it quickly becomes normal, and then your brain starts craving the next upgrade. If every raise immediately turns into higher spending, your financial life never actually improves. So Zyan created one simple rule that you can steal today. Every time his income increased, half of the extra money automatically went into savings and investments. The other half was his to enjoy without guilt. From that point on, raises didn't just increase his lifestyle, they increased his wealth. The third mistake was ignoring high-interest debt. One evening, while reviewing his accounts, Zyan noticed his credit card balance was much higher than he expected. It wasn't because of one expensive purchase. It was the result of dozens of small purchases quietly piling up over several months. He had only been making the minimum payment, and the balance barely moved. Then he realized something important. Credit card companies make money when people carry balances. Interest keeps eating your payments before they even reduce the debt. It's like trying to climb a mountain while someone keeps pulling you backward. So instead of focusing on the minimum payment, Zyan attacked the highest interest debt first. Every extra dollar he paid wasn't just reducing debt, it was buying back his future. Once that debt disappeared, his paycheck finally started working for him instead of the bank. The fourth mistake was saving everything but investing nothing. After a full year of discipline, Zyan finally built a $10,000 emergency fund. He felt secure. Then one day, a friend said something that completely changed his perspective. Savings protect your money. Investing grows it. Every dollar sitting in cash slowly loses purchasing power because of inflation. That's when Zyan realized that savings and investing serve completely different purposes. Emergency money should stay safe and easily accessible. Long-term money should be invested so it can grow over time. He also discovered that successful investing isn't about chasing the hottest stock or the newest cryptocurrency. Most people who build real wealth simply invest consistently in low-cost index funds that own hundreds of companies at once. His new rule became simple. Keep 6 months of living expenses and savings, then automatically invest every extra dollar above that amount every single month. The fifth mistake was trying to look rich instead of becoming rich. One night, Zyan met friends for dinner. Luxury cars filled the parking lot. Designer watches sat on the table. Everyone talked about expensive vacations and new purchases. Naturally, he started comparing himself. He started wanting the same things. But then he learned something surprising. Much of that lifestyle was financed with loans, leases, and growing credit card debt hidden behind impressive appearances. Looking rich and actually being rich are completely different games. Real wealth is often invisible. It's the emergency fund that nobody sees. It's the investment account quietly growing year after year. It's the debt that's already been paid off. From then on, before every major purchase, Zyan asked himself one powerful question. Am I buying this to improve my life or to impress someone who probably isn't even paying attention? That one question stopped most impulse purchases before they ever happened. The sixth mistake was waiting for the perfect time. By now, Zyan had developed good financial habits, but he still delayed investing more. He kept saying, "I'll invest when the economy gets better. I'll invest when interest rates fall. I'll invest after I learn a little more." Then he watched financial experts on television. Half of them predicted a market crash. The other half predicted record-breaking highs. Same day, same information, completely opposite opinions. That's when he understood the truth. Nobody knows exactly what the market will do next. Waiting for certainty often means waiting forever. The biggest investing mistake isn't investing before a market drop. It's never investing at all, so Zyan removed emotion from the process. Every payday, money automatically moved into his investment account. No guessing, no timing the market, no fear, just consistency. Because consistency beats prediction every single time. The seventh mistake was ignoring the power of small daily habits. 1 year later, Zyan walked into the same coffee shop where this journey had started. He opened his banking app once again, but this time everything looked different. His emergency fund was fully built. His credit card balance was zero. His investments were growing every single month. He hadn't won the lottery. He hadn't received a huge inheritance. His life changed because of hundreds of small, boring decisions repeated consistently. Packing lunch instead of ordering delivery, canceling subscriptions he didn't use, automating investments, following a 24-hour rule before impulse purchases, spending 10 minutes every Sunday reviewing his finances. Each habit seemed insignificant on its own, but together they completely changed his financial future. Here's what Zyan finally understood. His biggest problem was never how much money he earned. His problem was that his money had no direction. From the outside, almost nothing about his life had changed. Same car, same apartment, same job. But behind the scenes, everything was different. He no longer wondered where his money had gone because he was telling every dollar exactly where it needed to go. That's the real difference between surviving financially and building wealth. It isn't one brilliant decision. It's avoiding ordinary mistakes, staying consistent, and giving every dollar a purpose. If you recognized yourself in even one of these 7 habits, that's the perfect place to begin. Subscribe for more personal finance videos and let me know in the comments which one of these 7 habits has been quietly holding you back.